Hello everyone, how's it going? In this video, we're going to talk about Mullen, trading under the ticker symbol MULN. It has been a very interesting stock to cover recently, with a volatile price action as well as speculations for the years to come. At the same time, people are also having a hard time trusting this company with their capital in the long run. So in today's video, we will go through the latest fundamentals, the price actions, and my recommendations regarding what you should do about Mullen. If you appreciate my content, please drop a like, comment, and subscribe to my channel. Also, please check out the links down in the description area, as every single help is very much appreciated. So before I start, I'd just like to make a brief disclaimer. My videos are usually my opinions on what's going to happen and what might happen. It doesn't mean that they are, guaranteed investment advice and they should be watched for entertainment purposes. My videos are prepared either right before the uploading or like a few days before. So by the time you watch it, sometimes the price actions no longer reflect what's currently on the chart. But nevertheless, they are still relevant because the analysis is about the short-term momentums. Also, the analysis aims to cover the securities, when applicable, as broadly as possible, as we cover the fundamentals and the technical aspects, but also the price actions, recent events, the tendencies, the shareholder compositions, and other market behaviors. These will all affect our decision about if we should buy a security, how many shares should be bought, and what should be the level we buy them at. So with all that being said, let's jump into today's topic. Mullen is an EV company, and it's a holding with many brands that they have bought along the ways. This company first began operating around 2014 as a successor to a company called Mullen Automotive. They also had another version before called Mullen Motorcars, developing Mullen GT, which was one of the world's earliest EV supercars in the market. So the company tries to market themselves as an old-timer in the field. At least we can give them that credit regarding the fact that they've been around for a long time. But the question is, if by that they mean they've been staying in the game in a relevant manner or that they've been hustling. This is the main approach or worry that we have regarding Mullen. This is a highly capital intensive industry and increasingly, increasingly competitive. So there are also long-term challenges of keeping the valuations high, and this applies for Mullen and for other companies like Tesla, NIO, and so on. So another source of distrust comes with the CEO, Mitri. He has a track record suggesting that he is in this to squeeze out the company's value, so giving control to the company to the associates, and also increasing the number of shares and whatever, diluting the shareholders without necessarily the shareholders' consent. These are speculations and accusations towards him. Now, I'm not saying that they're all true, but there's a lot of these, enough for me to start doubting whether there's any truth to these accusations as well. For more, you can look at Hindenburg Research and their opinion about Mullen altogether. So, over the past few days, Mullen has been able to maintain the upward momentum and to hold the 40 cents level. For me, and I'm sure for many people, this is very encouraging because it means that there's enough people entering in the stock and to keep the stock up, which can help to fulfill the self-fulfilling prophecy, by the way. So the self-fulfilling prophecy of the momentum creating more momentums, ultimately going up to 50 cents and testing the $1 levels. Now, in terms of the longer terms, despite the upward momentums that we're having now, the company has been having a hard time over the past few years. They've been trading for the most part between $5 to $10, peaking around $15 before going to the penny stocks levels that they are in now. What this tells us is that Mullen has been hard hit by the ongoing stock market downfall and that its own fundamental weaknesses don't help. This assessment recently began to change, but in my opinion, it didn't reach a convincing level just yet. And that to a point, it still explains why I would recommend to trade Mullen instead of investing in it. Regardless of the recent distribution contracts, the short squeezes, the momentums, and so on. The interest around Mullen is clearly short-term, expecting to scalp a quick gain in a matter of weeks from the short squeeze, and not really waiting for the dividends to come. So the online communities up this point have been initially skeptical about Mullen, and in my opinion, they're right being so. But recently, it's been more polarized. So on one side, people are very optimistic about the short-term, volatilities. On the other hand, people are not really, far less optimistic regarding the long-term outlooks. These two visions are complementary in my view because both seem to be true. Mullen is not a company that you want to stay with for a very long period of time for some pretty obvious reasons that we're going to talk about in just a second. But at the same time, it's also a company with a large potential for upward volatilities. So this is why people want to trade it to begin with. So some have also mentioned that, Mullen is also a company with a lack of transparency when it comes to disclosing different issues regarding their partners, their suppliers, and so on. Yeah, this is part of the whole atmosphere. People don't necessarily trust Mullen, and they don't trust Mullen enough to give money to this company in terms of years and not just in terms of weeks. So on top of that, the macroeconomic trends within the sector have been under pressure due to several reasons as well. We have the increase of interest rates, and not just the increasing of interest rates, the fact that interest rates are likely going to maintain itself at this kind of rate for some time. The capital flight to other sections, the conflicts around the world, the ongoing supply chain issues, and also there might be a lack of demand for vehicles. Another factor to look at would be how is Tesla doing and how is Elon doing, and whether people are talking about him positively or negatively. Because very often people determine whether they want to invest in EV stocks based on if they like the vibe that is going around. And right now, I have to say, the vibe is a little bit morose, and I would prefer to see it getting much better. But of course, this is not up to me, and this is also why, to be honest, that I think that the demand for these shares is kind of lacking. Of course, it doesn't always follow the same trends as other companies, because it's a much smaller one with a higher degree of speculation in it. But still, when the market tanks, it tanked massively. When the market stopped tanking, I didn't really see it recovering back. So this is going to be a marginal trading position that's against or not really correlated to the trends of the market at 100% of the time. So when we look at the financials, we can see that Mullen is a company that's definitely running out of cash, and it's only a matter of time that they might have to go through a round of dilutions, and or because both can happen, a round of reverse stock split. Because if they cannot go above $1, they have to be delisted from NASDAQ, which is often something that's very negative for a company. Of course, if the current momentum maintains itself, we don't have to worry about this issue, do we? Nevertheless, right now, Mullen is distributing IGOs in Europe. Let's wait and see what's going to pan out in that section. It might be something good. We might have a good surprise when the next quarterly reports come in. But nevertheless, I honestly don't think that this contract alone is going to be able to turn the tides around. There are still fundamental structural issues that Mullen has to address in order to make this company a company that people can actually invest in. So obviously at the moment, the massive opportunity here is caused by the underlying assumption that at some point Mullen is going to short squeeze. I think that this is likely, and I think that this is a scenario that makes sense and seems to be written on the wall. Nevertheless, the reason why I'm a little bit iffy about whether we should let it ride is simply because it's been a couple of times that retail traders have been taken by surprise of different kinds of events that caused these short squeezes to eventually not working out. And this is why I would fully recommend people to at least cash out some of your position to save yourself from full exposure, to reduce the exposure whenever you're in the money. And I would say, maybe cash out. For example, my entry price is around 50 cents. So by the time it reaches 50 cents, maybe cash out 50% of the position and, let it run for another 50% in profit margins before closing the whole position. Or you can come back with the profits this time and then to let it ride. If it rides to the ground, then so be it. That's just sometimes how things are. Now, is now the time to buy? I would personally say that I do believe that now is a decent time to buy because we are still on the upward momentum, and it doesn't seem to be the end of things just yet. I would recommend to keep your exposure below 1% of your portfolio.